guys, Jeff Gibby here. Thanks for watching the video. Back in the webinar room today, I'm going to talk to you a little bit about the Knoxville Divergence indicator system that we've developed with Rob Booker. And let's go ahead and talk about that. Rob Booker is a very talented trader, does a lot of training around the country and around the world really, and has a lot of mechanical trading systems. The Rob Booker Knoxville Divergence is basically a counter trend indicator system, looking for very specific things to happen in the chart to kind of give you an idea that the trend is about to change. And I want to show you exactly what he's looking for. So let's go ahead and get into a chart. Right now I've got the British pound open on a daily basis right here. And what he's looking for specifically is he's looking for a price that is trending. This is for a short position. You can reverse this for the long position, but he's looking for a stock, or in this case a currency pair or a future. It'll work on anything. He's looking for price to be going up while momentum is going down. He's looking for a classic divergence of that. So I want to show you exactly what he's looking for. It's really, really simple. If you look at this chart of the pound, right here we've got a little bit of a line drawn on the chart. We're automatically identifying this divergence, but I want you to understand what we're doing. Okay, so if I took a little bit of a horizontal line and I put them right above these two pivots that were drawn for you, and these are pivots, the pivot definition that we're using to be really specific is a high surrounded by two lower highs. Okay, so that's a pivot. Whenever that happens on a chart, what we'll start look at is we'll take a look at what momentum is doing. Okay, and here we've got a pivot. A few bars later on this chart, we've got a bit of a higher pivot right here. During that time, momentum's actually gone down. So the price of the security is rising, but the momentum in the security is actually falling, as you can kind of see in this example. This is a good example of a stock that's likely to change trend. Okay, there's one other requirement for him to issue a signal, and that's that your RSI be above 70. Very, very simple, but powerful system. Works very, very well. Actually doesn't happen all that often on a chart, but when it does, that's where you're going to look to take a short position. We do have expert commentary in here, and what that means, in case you're not familiar, I'm going to go ahead and open up the commentary window. I'm going to put it right here. You'll notice there's a little black triangle above this sell signal right before this sell off, and it's basically just telling us that the GBP is showing a bearish divergence entry between price and momentum. If you're looking to take advantage of this opportunity, you should look to take a short positions. Option traders looking to take advantage of this on a daily chart should look to buy puts or a similar bearish position. You should also look to exit this position at a recent support or resistance level, which is important because keep in mind what you're doing is you're betting that the stock is going to go down or the future is going to go down while it's in an uptrend. It's a counter trend indication, and it works, but it doesn't work all the time, so you do want to put a stop loss in place. Now, you'll notice if we kind of scroll out in this chart, you'll notice that it just doesn't happen that often, right? I did find a couple of examples for you that I do want to show you to kind of give you an idea of how this works. So let me go ahead and just show you IBM. It does work on any type of an instrument. Here on IBM, I'm going to go ahead and maximize this. I'll go ahead and close down this commentary now too, just to kind of clean up the view. Here we actually had not one, but two Knoxville divergences in a huge uptrend on IBM, and that's immediately where the price began to stall and fall off. Okay, I'm just going to show you one more example. I want you to kind of understand that it works on a lot of different time frames as well. So if we come over here to the euro, okay, right here we had a really good divergence. You don't necessarily have to look at momentum. The template will do that for you. But here we had a very nice divergence, and here you get your signal. Very, very big sell-off in the euro. Now again, these patterns don't happen very often, which is why we implemented a scanner to go with this. Which means if I come into the Power Console in the MetaStock program, I can click on the scan. I can go ahead and find my Knoxville Divergence scan, and I can run it against futures. I can use it against Forex. I can do ETFs. And again, Rob actually says in his supporting documentation for this that he's used it for many, many years on all kinds of instruments, on all kinds of time frames. Is typically what this system is looking for is a nice, quick, short reversion to the mean type of a move. Okay, and so when you run a scan, I ran all of the optionables. If you know anything about what I like to look at, I like to look at optionable stocks. Here's kind of the report that came up today. It's just telling me out of the 4,400 stocks that are available, I could look to go short on any of these three. So it does a great job of actually kind of eliminating a lot of noise and allows me just to focus on these ones that have an opportunity for a nice dramatic move. Okay, that's really it. That's kind of what it does. It's a very, very simple but effective method for trading into the thing. It includes the exploration, the indicator, the template, and the expert advisor, and it's just 99 bucks. That's a one-time cost. You don't have to pay for that over and over again. If you need it, we can include a trial with MetaStock. We'll include market data. And of course, we always back it with our money back guarantee. So hope you enjoyed the video. If you're interested, give us a call at 800-882-3040. And thanks for watching the video.